Hey everybody, John Felici here, Security National Mortgage. Here today with my business associate, Sean. Me and Sean today, what we're going to do, we're going to talk a little bit about closing costs. Now, that might be a subject that a lot of people might be like, well, obviously, everybody knows what closing costs are, but the truth of the matter is, a lot of people don't know what closing costs are. I get asked all the time, what are closing costs? Why do I pay these things? Where do I come up with the money to pay for this? Can I get out of paying closing costs? So it's like, let's talk a little bit today about closing costs. Exactly what closing costs are, they're the things that are associated with you purchasing a home. So some closing costs come from the lending institution. Some closing costs you would be there even if you bought the house for cash. So for that reason, whenever you're going out, you're comparing different lending institutions, who's got the best deal and whatnot, there are certain things that would not factor into one lending institution's quote to another lending institution's quote. Things like, say, an underwriting fee, a processing fee, things that would be the same no matter where you go, things like homeowners insurance. For example, you don't want to go to, one mortgage company and maybe, I estimate a $150,000 house. I estimate the homeowners insurance to be about $1,500 a year. So you go into another mortgage company and maybe they estimate the homeowners insurance to be $1,000 a year. Now that doesn't mean that the homeowners insurance is going to be better depending on which mortgage company that you go to. Homeowners insurance is something that you pick out for yourself, and the lending institution, it makes up part of the costs and expenses for you to buy a house, but it's not something that we choose or have any kind of control over. You're the one who solely chooses your own homeowners insurance policy plan, what it covers. And so, other things that are not subject to the lender, title charges. Title companies, they operate independently from mortgage companies and real estate agents, although lots of mortgage companies and lots of real estate agents, we all have our preferred title companies that we like to use on different transactions. Personally, I like Apex Title around Tulsa. It's like they're a great place. Damon Bedell's place, they do a lot of good business, good turn times, they have very good fees. But, depending on who you're dealing with, they may recommend one title company or the other. But when it comes down to it, it's up to the buyer. You do have the right to choose your title company. But usually that gets deferred to the lender or in most cases the agent. But, title companies, they have different fees from place to place. But they're all very close to one another. But once again, title fees, that's not something that whenever you're comparing closing costs that you want to try to compare from lending institution to lending institution because, frankly, you could pick whatever title company that you want to, and the lender doesn't really have anything to do with how much those title fees are. So what makes up closing costs? Well, you've got the lender's fees, which are generally underwriting and or processing fee. You might have discount or origination points, which have to do with the pricing of the interest rate that you choose. Then you're going to have your title fees. You're going to have your state recording charges, transfer taxes. There's some stamps and doc preparation fees and things like that worked into there. Maybe a pest inspection you might have. You're going to have a year of homeowners insurance up front. You're going to have money that goes into your escrow account for your taxes and for your insurance. Now, if you're not familiar with how an escrow account works, most all loans are going to have an escrow account. Now, what that is essentially it's an account where your taxes, you pay your taxes monthly, for example, but all year long as you pay these taxes, it builds up in the escrow account, and then at the end of the year when the tax bill comes, the lender pays that for you. You'll get a tax bill, but essentially they are wrapped up into your monthly payment and they're handled through the escrow account. But in order to start an escrow account in Oklahoma, our taxes are due in December. So what winds up happening is, in order for there to be enough taxes in the escrow account, when those taxes come due in December, you have to catch up the number of months that have already passed in a year. So for example, let's say that you're going to have an April closing. Well, 4 months have already passed. So for there to be enough taxes in that account. Whenever tax time rolls around in December, we have to catch up those 4 months that have already passed. Then in addition to that, we're going to do a 3-month cushion. Some lenders will do a 2-month cushion, some will do a 3. Right now I believe we're doing a 3-month cushion. So that cushion is just there. I mean, maybe you don't pay your mortgage payment 1 month. So there's a cushion in there for taxes and or insurance to be paid, so it's always there. So then going back to that April closing, let's say that we have our April closing. Well, you've got 1, 2, 3, 4 months that have already passed, plus the 3-month reserve, so you have a total of 7 months going into the tax escrow. So then let's just say your property taxes are $100, then that's going to be $700 that goes into your tax escrow. And then for insurance, you're going to have 1 year paid up front to the agent, plus the 3 months reserves. So then you wind up with 13 months. Let's just, once again, for simplicity, homeowner's insurance is $100 a month. You got 13 months going in, it's $1,300. So if you see where I'm going with this, it's like depending on the time of the year that you close and how much your homeowner's insurance policy is, how much your taxes are, you know, this directly correlates to the total amount of closing costs, the total amount of money that's going to be due from you at closing, you know, in addition to your down payment. So then with closing costs, I mean, technically closing costs are really just the things like, you know, underwriting and processing fee. But when I refer to closing costs, I refer to everything that it costs you to buy a house. Now, when you're talking about a house that might cost, I don't know, $150,000, your total closing costs with your taxes, your insurance, your state recording fees, a couple thousand to the title company, a couple thousand to the lending institution, you're looking at nearly about $6,000, $6,500. Now, you got a lot of times where, you know, you have a buyer doing a no down payment loan. So when you got this no down payment loan, even though you have no down payment due at closing, you still have your taxes and insurance due and your closing costs and everything. So then what happens? I mean, you're doing a no down payment loan, so you don't want to bring money to closing. So you've got $6,500 in closing costs. I mean, that's still money you have to bring to closing. So what do? Well, if you have a good real estate agent, the real estate agent is going to wrap those closing costs up into your sales price, and the seller's going to pay them for you. Now, I would say that 99.9% of the government loans that I close, the seller is paying usually 100% of the buyer's closing costs. Now, I mean, this takes negotiating, and I have had instances where you know, realtors will neglect to ask for the enough closing costs or any closing cost at all, and the buyer's unprepared for closing costs. So then we have to renegotiate the contract, have to work something out. But closing costs are something that should be taken care of, you know, in the time that you're making offers on this house and negotiated into the sales price. Because like I said, I mean, you've already got, you know, FHA, you've got a 3.5% down payment. USDA, you have no down payment. VA, you have no down payment. But all of them are going to have the closing cost. So then, you know, whenever you go out and you're making offers on houses and such, you need to be mindful that there are closing costs. Even if you are doing a loan with no down payment, you need to get with your realtor, you need to get with your loan officer, you need to make sure that what cash you have available for closing is consistent with the money that you're going to have to bring according to the loan and the purchase agreement. So, hey, everybody, from me, from Sean, would like to say, have a good day. I can't see this far, so I'll answer some questions, you know, after I get off of here. Oh, sorry, had a notification come up. So I'll answer some questions whenever I get off of here, if anybody's got anything. But, you know, you can remember, you can always call me, text me, 918-630-1991. You can message me here, email me, jon.f, like Frank, or Fleege, Leege, @snmc.com. Now, everybody, I hope you have a great day. Tomorrow's Friday. Personally, I'm looking forward to the weekend. If you guys got questions, you need something, give me a call. I'll see you.